All right, so you can misappropriate company assets either by stealing them, which is what we typically think of, but you can also misuse them, which typically misuse means the employee's using them for their own purpose. So think, okay, some tradesman, like a plumber or electrician, has his employer's expensive truck, tools, all this stuff that costs thousands and thousands of dollars. They go out on a job and they say, you know, if I do this for you today, it's going to cost $2,000, but I can come back this weekend and do it for $500. And then they take the employer's tools and truck and everything and do the job and just keep $500 for themselves. So that is misuse. All right, and so certainly people borrow their employer's stuff all the time, their computers, their laptops. They do personal business on them, and that's misusing them. So there is non-cash types of frauds, right? So not everybody steals cash, although certainly that's the most common thing. They might steal inventory, they might steal information, and they might steal securities. All right, so these are the main areas where non-cash frauds occur, because that's what they have, right? So you can certainly imagine they're going to steal inventory, either to turn around and sell, or just they're going to take a few things that they use for themselves. Either way, it's stealing non-cash type fraud. Information. You can steal information on clients and sell it to somebody else. That actually happened where I worked. I worked at a financial institution, and we had an employee who created a report that listed everybody who had a mortgage and their account balances at our place and sell it to like a home builder so they could call on them and try to sell them something, I guess repairs or something, I don't know. But anyway, so they just stole information and sold it. It's very valuable. And of course, securities. So there can be theft involving stocks, bonds, other things. That probably doesn't happen that often, but it can. So let's talk about a form of fraud against organization called corruption. So there's several different things. So this is not so much stealing like their cash or their assets, although it can involve a bit of that. Typically, it's more about granting preferential treatment. Like if you're the purchasing agent for a company and you can give that contract to whoever you choose, that might be worth something to somebody, and they might give you something in exchange. So that kind of thing. So bribery, conflict of interest, economic extortion, and illegal gratuities are typical what we see. So we're going to talk about each of these. First, we're going to talk about bribery. So bribery is when you offer something of value, and again, it doesn't have to be money. I mean, we typically think of like an envelope of cash under the table, right? The mordida. But, you know, it doesn't have to be cash, but, typically it is. But anyway, to influence an official act, right? So typically at organizations, there are two broad categories, kickbacks and bid rigging. A kickback is, I'm going to sell you this at this price. You pick me to make your purchase from, and I'll kick you back 10% of the sale. Kickback, right? Or bid rigging, help make sure I get the deal and I will give you money, right? Rig the bid, right? All right, we had that UTSA case on bid rigging. Conflicts of interest, when an employee has an interest in a transaction, most frequently purchase and sale schemes. Employees sell things to themselves at good price or discount, or somebody else at a discount, and then turn around and get something. Or they have a purchasing scheme. where they're the ones that are actually being purchased from it. The company doesn't know it. Like, think about that Santikos case, the guy with the cups. You know, that could be considered a conflict of interest because he had a company and he sold cups. He just sold them for more than they should have been paid for, right? It is possible to commit mutual fund fraud because mutual funds prices are set at the end of the day. But in this international world with electronic markets, it is possible to know the price for something before it's set in the US at the end of the day. So people do what's called market timing and late trading, and trade on their own accounts using their employer's mutual funds, and make themselves some money. Economic extortion is kind of the opposite of bribery, right? So in bribery, the vendor comes and says, hey, purchasing agent, if you will send your purchase orders to me and not the competition, I will give you 10% of the sale, right? Something like that, bribery, kickback. In economic extortion, that employee goes to the vendor and says, if you want business from me, you're going to have to pay me for it. So that's kind of a threatening situation. It's all of these are criminal offenses, but I guess this is a little higher if they're doing threatening things with physical harm. Illegal gratuities is like a bribery, but it's just kind of a reward. So it's like after the fact. There's no agreement. You will send me this contract and I will give you $2,000. That wasn't a thing. But after the fact, like, hey, thanks for the contract. Here's a trip, a vacation for you and the spouse. Go enjoy. You know, like, they're trying to encourage you to keep using their business. So those are all the scenarios from chapter 14. So you do have a case on chapter 14, so go work that.